Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial wizardry that keeps the corporate world spinning. Today we're diving into a filing from Blackstone Infrastructure Strategies LP, and let's just say they've been busy making some significant moves, both in terms of selling parts of their business and figuring out just how much it is all worth. Stick around because we've got some interesting numbers to break down before we jump in. If you did get in clear, no nonsense explanations of these complex financial documents, make sure you hit that subscribe button. We've also got a fantastic community over on Discord, linked in the description, where we break down these things and more. Alright, so what we're looking at is a Form 8K, which is basically a report companies file when something important happens that the public should know about immediately. Think of it as breaking news from the corporate world. This particular report from Blackstone Infrastructure Strategies LP covers a few key events and financial updates. Let's get right to the juicy part, the financials if you will. On the 1st of November of last year, Blackstone Infrastructure Strategies LP, which we'll call the fund for short, sold off some of its limited partnership units, and when I say some, I mean a lot. They raked in approximately $310.7 million from this sale. Now this wasn't just one big chunk, they sold units across different classes. For example, they sold over 8.3 million Class I units, bringing in about $225 million. Then there were the Class S units with nearly 2.5 million units sold for around $67.7 million. And finally, they moved about 669,000 Class D units, pocketing roughly $17.9 million from that. What is interesting here is that this figure of $310.7 million is just for the fund itself. When you look at the bigger picture, including other Blackstone managed vehicles that work together, the total amount raised from issuing interests was actually closer to $313.7 million. It shows that they are actively managing their assets and bringing in capital. Now, how did they manage to sell these units? They did it through what is called a private offering. Basically, they were selling these not to the general public, but to select investors who meet specific criteria. We're talking about accredited investors, which means people with a certain level of income or net worth and qualified purchases, which are typically sophisticated investors with substantial assets. This was all done away from the usual public registration process, relying on exemptions under securities law. This is a common strategy for large investment funds to raise capital without the extensive regulatory hurdles of a public offering. It also means these investors are likely sophisticated and understand the risks involved. And just so you know, these units were sold to third-party investors, including some through a specific partnership set up for investors with particular tax needs, like tax-exempt or non-US investors. But that is not all. The report also gives us a look at the fund's valuation, specifically something called transactional net asset value, or transactional NAV. Think of this as the calculated worth of the fund's assets at a specific point in time used to determine the price of those units we just talked about, as of the 31st of October of last year. The transactional NAV per unit for Class I was $26.84, for Class S it was $26.64, and for Class D it was $26.77. When you zoom out and look at the entire group of these Blackstone infrastructure entities identified as Big Infra, their combined transactional net asset value was around $3.2 billion. So we have the fund selling units for hundreds of millions, and the total value of what they manage is in the billions. This gives you a sense of the scale we're dealing with. The report goes on to explain that this transactional NAV is calculated based on the value of their investments and other assets, minus any liabilities, all according to their valuation policy. It's important to note that this transactional NAV can actually be different from the net asset value calculated under standard accounting rules. The fund manager recognizes certain expenses over time, like organization and offering costs, which can affect this NAV. Also, some future tax liabilities might not be accounted for if they reasonably expect those won't be an issue when they sell off their investments. This detail about the potential difference between transactional NAV and standard accounting NAV is a crucial distinction, implying that the reported value per unit might not perfectly reflect the ultimate accounting value. And to wrap things up, this report has been properly signed off by Christopher Striano, the Chief Financial Officer. This signifies that the information presented here is officially coming from the company. So, what is the story here? Blackstone Infrastructure Strategies LP is actively managing its capital, raising significant funds through private placements of its units. This suggests a healthy appetite from sophisticated investors for their infrastructure investment strategies. The simultaneous reporting of their transactional NAV provides insight into how they value these investments and price new units. It is a snapshot of their operational and financial management, showing that they are continuously engaging with capital markets. The strategy of using private offerings exempt from public registration is a key indicator of how large alternative investment funds operate, focusing on institutional and high net worth clients. Looking at this, there isn't a glaring weakness presented in this specific filing. The company is operating as expected within its specialized investment sector. The main opportunity and forward-looking aspect is how these funds raised will be deployed into new infrastructure projects and how those investments perform, ultimately impacting future NAV calculations. The risk, as with any investment fund, lies in the performance of its underlying assets and broader economic conditions impacting infrastructure investments. In conclusion, this 8K filing paints a picture of a well-oiled financial machine actively participating in capital markets. They are raising significant capital through private offerings and transparently reporting on their valuation methods. It is a solid report that demonstrates continued engagement with their investor base and strategic asset management. Alright, that is our breakdown of Blackstone Infrastructure Strategies LP's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable to you, hitting that like button really helps us out. And of course, subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community linked in the description for continuing the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.